Good morning, guys. I'm going to be doing asset disposals this morning. I'm just going to explain example 2 in detail, and I hope after this slide you'll actually understand everything that we have done. We will be looking at this question here. I just want you to take note of a couple of things before we start. Firstly, guys, take note of the financial year. All right, they told you that this is an extract from the pre-adjustment trial balance, but the balances are on that date, which is the 31st of December 2014. So that is the end of the financial year. You need to determine the beginning of the financial year. In this case, you can easily tell that the beginning of the financial year will be January 2014, the 1st of January 2014. Now I'm going to highlight a couple of things here. They gave you the balances at the end of the year. The first one will be 500,000 rand, which is the balance for land and building. The second one will be 350,000 rand, which is the balance for vehicles. Please note that these balances will be balances at the end of the year. Unless the adjustment tells you otherwise, there will be balances at the end of the year unless the adjustments tell you otherwise. However, this amount here of 150,000 rand, which is the balance of your accumulated depreciation, please note that this will always be at the beginning of the year. The balance of your accumulated depreciation will always be at the beginning of the financial year. The reason for this is because we only calculate depreciation for the current year at the end of the year. The fact that we are given adjustments, for instance, here they told us that vehicles are depreciated, right? Vehicles are depreciated at 20%. I also need you to highlight that PA, which is per annum on cost price. They're simply telling you that we haven't calculated depreciation for the current year. Therefore, this amount here cannot be the balance at the end of the year because we haven't calculated depreciation on all vehicles for the current year, right? Now they told you that a vehicle with the cost price 15, highlight important, cost price is 115, was sold. So this 99,000 rand is what we refer to as the selling price. So we sold it for 99,000 rand and it was sold for cash. All right, this is also very important. Okay, we sold this on the 30th of April. Now you realize that the 30th of April, guys, we sold it 4 months into the current financial year. All right, the reason why they told you why this vehicle, as to when this vehicle was purchased, it was purchased on the 1st of January 2014. They're simply telling you that we are not giving you accumulated depreciation of the asset sold. Now, I think this is where most of you get confused. Guys, this 115, it is the total, all right? This is the total accumulated depreciation on all vehicles, all right? It is the total accumulated depreciation on all vehicles. Probably when I record it, it'll get into your brain, right? That is the total of all vehicles at the beginning of the year, meaning that this is the total accumulated depreciation on the 1st of January 2014. I don't know how many times I need to emphasize that. And there's the total accumulated depreciation at the beginning of the year, which is the 1st of January 2014. Here we need to calculate the total accumulated depreciation, but of the asset sold. All right, we have total assets, total amount of assets, and we only have amounts of the asset sold. For instance, well, we'll deal with that later, but let's just go into our ledger accounts. Before we get into our ledger accounts, I need you to pay attention into this. We have the balance at the beginning of the year, all right? The beginning of the year is the 1st of January 2014, and then we've got the end of the financial year, which is the 31st of December 2014. An important date, the reason why I highlighted in red is because something happened. We lost an asset, all right? We sold an asset, all right? But you were given the balance. Remember the 350, we discussed it in the previous slide. That is the closing balance, unless the slide tells you otherwise. I mean, unless the adjustments tell you otherwise. You'll realize that if I was to go back to our adjustment. This is our adjustment. They said nothing about the transaction not recorded, right? They said nothing about the transaction not being recorded. Hey, they said this transaction of the sale of the asset was not recorded. The 350 was going to be an opening balance. However, in this case, they did not say it was not recorded. So since they did not say that it was not recorded, we assume that it was recorded, making this 350 the closing balance, as I've said earlier on, right? I'm going to go back to our financial period, which is our timeline, all right? That 350, as I have specified, this is the balance at the end of the year. We assume that it was recorded since nothing was said, all right? On the 30th of April 2014, we sold a vehicle and the cost price of that vehicle was 150,000 rand. If this is the closing balance, note that it means that we already subtracted 150. So for us to determine the balance at the beginning of the year, we need to add that 150,000 rand with 350,000 rand and we'll get 500,000 rand. Hence, I've also specified it here. 350,000 rand is 500,000 rand is the sum of 350 plus 150. This is the balance at the beginning of the financial year. This is only the cost price. This is the cost price of all vehicles. This is the cost price of the remaining. This is the cost price of vehicle that was sold, of the vehicle that was sold. In the general ledger, you need to understand your vehicle account is an asset account. It increases on the debit side and it decreases on the credit side. That is why when you record balance brought down at the beginning of the year, remember I said the beginning of the year is the 1st of January 2014, the balance brought down will be 500,000 rand as I've showed you guys about. However, something happened. Obviously, we don't have vehicles worth 500,000 rand at the end of the year. What happened? That is because we sold an asset. And when we sell an asset, an account that will be affected will be what we refer to as the asset disposal account. All right. Now it will be recorded in the general journal. The cost price of the vehicle will be 150. Now please note, I've said this so many times. For your asset will always increase or decrease at cost price, right? Obviously, because this is a vehicle account, it will increase when we buy vehicles and it will decrease when we sell a vehicle, right? And now, balance at the end of the year obviously will be balance carried down, will be 350,000 rand. The totals on both the debit side and the credit side must be the same. It will be 500,000 rand. Meaning that on the 1st of January 2015, our balance brought down will be 350,000 rand. This is the cost price of the remaining vehicles. And I put a bubble on that. That is the cost price of the asset sold. So it will decrease the value of your vehicles. And remember, because this is an asset, it will decrease at cost price. Note: reduce the vehicle's account by the cost price of the vehicle sold. The cost price of the remaining vehicles will be the total cost price minus cost price of the vehicle sold. The total cost price was 500,000 rand. When you minus 150,000 rand, you'll have the cost price of the remaining vehicles, which is 350,000 rand. What about the accumulated depreciation of the assets sold at the beginning of the year, right? This is what we have. This vehicle was purchased on the 1st of January 2012. Remember, we are trying to calculate accumulated depreciation of the assets sold at the beginning of the current financial year. but it was bought on the 1st of January 2012. And that's why, guys, you need to remember everything that I ask you to highlight. I asked you to highlight what accumulated depreciation is, and I stated that accumulated depreciation is the sum of the depreciations of the asset from when it was bought. In this case, it was bought on the 1st of January 2012. We had it on the 1st of January 2013. Note that the 1st of January 2013 is a year. It means we have had it for a year. From 1st of January 2012 to the 1st of January 2013, it's a year. From the 1st of January 2013 to the 1st of January 2014, it's another year. Meaning that we have had this vehicle for 2 years. And I need to specify to you, the 1st of January 2013, it is the beginning of the financial year. It is the beginning of the current financial year. So we're going to calculate depreciation of this asset for the first year, which is from January 2012 to December 2012, or you can simply say from January 2012 to January 2013 is the same thing. 31st of December 2012 is the same as the 1st of January 2013. Because we have used this vehicle, they said we need to depreciate vehicles at cost price. So we're going to multiply 150,000 Rand by 20%. Remember this 20%, I asked you to highlight this in the first slide. It's per annum for the whole year. The reason why I'm multiplying this over 12 is because from the 1st of January 2012 to the 1st of January 2013, it is actually 12 months. So we have used it for 12 months out of 12 months, so which is a year, which is simply 1. So your depreciation will just be 30,000 Rand. You don't need to multiply by that 12 over 12, by the way. For the next financial year, which starts on the 1st of January up to the 31st of December 2013, we used it for the whole year. So hence we do the same thing. So the depreciation for 2012 was 30,000. Depreciation for 2013 was 30,000. It simply tells us that this is the beginning of the current financial year, as I've stated. All right. Now, accumulated depreciation at the beginning of the current financial year will be 60,000 Rand, which is 30,000 from the 12 financial year and 30,000 financial year. I hope that is clear. Hence, we have accumulated depreciation at the beginning. Note that the beginning of the year is the 1st of January 2014. Moving right along. Important notes as well. I wrote this when we started, right? When we sold the asset, we sold it on the 30th of April 2014. Now, on the 1st of January 2014, the cost price of the remaining vehicle, question is, what is the cost price of the remaining vehicle? It'll be 500,000 Rand minus 150,000 Rand. I hope that is clear. I explained it in the earlier slides. And then we're going to calculate accumulated depreciation of the remaining. Please note the key word here. That is the cost price of the remaining. This is the accumulated depreciation of the remaining. You're going to take your total accumulated depreciation and minus the accumulated depreciation of the asset we sold. I showed you how the 60,000 Rand. It was a 30,000 Rand for the 2012 financial year plus a 30,000 Rand for the 2013 financial year. So basically, we are left with the cost price of the remaining. We are also left with the price and depreciation of the remaining. The sold have been subtracted. Hope that is clear. Accumulated depreciation balance given in the trial balance will always be at the beginning of the year, and I did explain that in the first slide. Now we have 150,000 Rand there, which is accumulated depreciation of all vehicles at the beginning of the financial year. Now we're going to be calculating depreciation, all right? This is what you need to note. Our financial year, which is very important, and when we sold the asset, right? You'll realize that at the end of the financial year, the cost price of the remaining assets was 350, all right? Well, that is supposed to be 90,000. I don't know why I said depreciation of the remaining. Sorry for that, please. This is the depreciation of the remaining. Okay, and I gave you the cost price at the beginning of the financial year as well, right? Now that 150, guys, it is the cost price of the asset that was depreciation. Apologies for that. This is the cost price. Okay. Now the cost price of the sold is 150. Accumulated depreciation of the sold is 60,000. 150 minus accumulated depreciation will actually cost minus accumulated depreciation is carrying value, which is 150 minus 60,000, and that will give you 90,000 rand. For the current financial year, which is the 2014 financial year, we only used this vehicle for 4 months. That is why I apportion it. We say we apportion it. To apportion simply means that I only calculate depreciation on this asset for a period over which I've used it. I've only used it for 4 months, which is from the 1st of January 2014 to the 30th of April 2014. So I've used it for 4 months. So out of the 12 months, remember this 20,000 is annual. It's for the whole year. So I have to adjust it. Out of the 12 months, 20%, I've only used this for 4 months, which will give me 10,000 rand. So hence I said here, I've only used it for 4 months. I've only used this asset for 4 months. But what about the remaining assets? The cost price of the remaining assets is 315. I did explain how I got the 315. Accumulated depreciation of the remaining assets will be 90,000. Please note the acceptors. These are the amounts at the beginning of the year. The carrying value of the remaining assets at the beginning of the year will be 260,000 rand. We're going to be calculating depreciation of the remaining assets. Okay, depreciation of the remaining assets. The depreciation of the remaining assets will be 350,000 rand times 20%, but we will use it for the entire year. So that's why I multiply by 12 over 12, which is 70,000. Now, in this case, remaining vehicles were used for the whole year, that is 12 months. That is why I have it as 70,000 rand. And I multiplied the depreciation rate by the carrying value, by the cost price, because they told you that these assets are depreciated at cost price. What is the total depreciation on all assets? Meaning that depreciation of the assets sold plus depreciation of the remaining, it will be equal to 80,000 rand, which is 70,000 rand plus 10,000 rand. So this is the total depreciation of all our vehicles. I hope that is clear. Moving right along. We're going to be looking at accumulated depreciation on vehicles. Remember, guys, I said this is a valuation allowance account. Okay, it is neither a liability, it is neither a negative asset. I know in most textbooks they'll say this is a negative asset. I disagree with that. Right? Accumulated depreciation is simply an account that reduces the value of your asset. Right? So because depreciation reduces the value of your asset, anything that reduces the value of your asset will increase on the credit side because your asset increases on the debit side. So accumulated depreciation on vehicles account will be minus plus, meaning that the balance brought down on this account will be on the credit side. And I did tell you guys it's 150,000 rand that was given to you in the trial balance. This account will increase by the depreciation of the asset sold, which was 10,000. Remember, we used this asset for 4 months. And then you can increase it again by the depreciation of the remaining assets, which is 70,000 rand. Remember, this account is increased by the depreciation. In this account, you only record depreciation and nothing else. Okay, depreciation of the assets and nothing else. No cost price, nothing, just depreciation of the assets. And this account will increase by the depreciation amount. In this case, it will be 10,000 rand of the asset that we sold plus 70,000 rand of the remaining assets. I hope that is clear. We sold a vehicle. We need to take out the depreciation of the vehicle we sold. It will be asset disposal. It will be recorded in the general journal. Depreciation, the total accumulated depreciation of the asset we sold. Remember, the accumulated depreciation of the asset we sold at the beginning of the year was 60,000 rand. I know some of you probably forgot this. I'll go back to it again. It was the 30,000 rand for the 2012 financial year. Remember, we bought it on the 1st of January 2012. And then we had another 30,000 rand for the 2013 financial year. When you add those two, accumulated depreciation of the asset sold at the beginning of the current financial year, it will be 60,000 rand. I made it clear. That 60,000 rand increased because we used this asset in the current year. We use it for 4 months. So the depreciation of this asset in the current year was 60,000. So the depreciation is no longer that 60,000 rand. It has increased. Question is, what is the new accumulated depreciation of this asset? This account will decrease by how much? Exactly, it will decrease by 70,000 rand because this is the total accumulated depreciation of the asset we sold. I hope that is clear. The balance carried down on the 31st of December will be 160,000 rand. This balance is simply your accumulated depreciation of the remaining assets. How did we get it? You simply total both sides, we'll get 230,000. 230,000 minus 70,000 will actually give you that 160,000. So this 160,000, it is the balance of our accumulated depreciation at the end of the financial year. This is the accumulated depreciation of the remaining assets. I hope that is clear. I made a bubble. Depreciation of the asset sold. Right? This is the depreciation of the current year apportioned according to the number of months over which we use the asset in the current year. Please remember, we only use this asset for 4 months. That's how we got that 10,000 rand. I explained it in the previous slide. This is the accumulated depreciation of the asset we sold up to the date of sale. So up to the date of sale, accumulated depreciation of this asset was 70,000 rand, which is the 60,000 rand on the 1st of January 2014 plus the 10,000 rand for those 4 months that I've highlighted. Note that accumulated depreciation is the sum of all depreciation. It is therefore increases on the credit side. It is increased by depreciation, and it is decreased by the accumulated depreciation of the asset we sold. Current year depreciation of the asset sold increased this amount by 10,000, and current year depreciation of the remaining asset increased this amount by 70,000. The reason why I'm highlighting these ones in red is because they are reducing your accumulated depreciation. And the only thing that will decrease your accumulated depreciation is the accumulated depreciation of the asset we sold. Accumulated depreciation of the asset sold must be calculated from when the asset was purchased, which was the 1st of January 2012, up to the date of sale, which is the 30th of April 2014. Accumulated depreciation of the asset sold is 60,000, which was the balance at the beginning of the year on the 1st of January 2014. And I showed you how we got that 60,000 rand. But I know you probably forgot again. I'll remind you. It is the 30,000 for the 2012 financial year plus the 30,000 for the 2013 financial year. So on the 1st of Jan, our accumulated depreciation was 60,000 rand. Where does this 10,000 rand come from? This is the current financial year depreciation. Alright, we've only used this asset that we sold for 4 months. That's why we got the 10,000 rand. Remember, we need to calculate depreciation from when the asset was purchased. And see that because it's red on red, up to the date it's red on red. Therefore, the accumulated depreciation account will decrease by 70,000 on the debit side. Now, your asset disposal, I told you guys this will always be the same. It will never change. Cost will always be on the debit side. Now we have that as 150. If you made a profit, it will be on the debit side. Let's see how we made that profit. Accumulated depreciation of the asset sold will be 70,000 rand. 150 minus 70,000 rand will give you how much? Think about it. Now we sold this asset for 99,000 rand. Please erase this creators control because I did space. We sold it for cash. Okay, the total on both sides will be 169. Okay, in this case obviously we didn't make a loss and it will be 169. 169 minus this 100 give you this profit, which is 19,000. Please note that if it was a loss, the credit side, so we made a profit on the sale of this asset. This is where you guys are struggling and I don't understand why. Okay, firstly, your tangible assets is divided into 3 parts. It is carrying value at the beginning of the year, the end of the year, and the movements. So basically, it is divided into the first part, the second part, and the third part. Alright, let's focus on the first part. Cost price at the beginning of the year, how much was it? Exactly, it was 500,000 rand. Accumulated depreciation at the beginning of the year, how much was it? Exactly, it was 150,000 rand. In your notes, I asked you to highlight what carrying value is. Now, what is carrying value? Exactly, carrying value is cost minus accumulated depreciation, which is 500,000 rand minus 150,000 rand. I wrote that in red. Additions at cost. Did we buy any vehicle? Exactly, that's why we have 0. Disposals at carrying value. What did I say carrying value is? I said carrying value is cost minus accumulated depreciation. However, here we only focus on the carrying value of the asset sold. Question is, how do we calculate carrying value of the asset sold? Remember what carrying value is. What is carrying value? Cost price minus accumulated depreciation. What was the cost price of the asset sold? Yes, it is 150,000 rand. What is the accumulated depreciation of the asset sold? Yes, it is that 70,000 rand. I hope you remember how we got it. I've explained it so many times. That is why we have disposals at carrying value of 80,000 rand. That is because we took 150 minus 70,000. Depreciation on vehicles. Before we get to depreciation on vehicles, I also need to specify this. Disposals is a loss It means that we are losing the asset. That is why disposals at carrying value is in bracket. It's a minus. We're losing the asset. Depreciation, I said it is the cost of using the asset. We can therefore conclude that it will also be in bracket. But you look at the depreciation of all assets for the current year. What was the depreciation of the asset sold for the current year? Please do not confuse this with accumulated depreciation. I said depreciation. What is the depreciation of the asset sold? Exactly, it is 10,000 rand. And what is the depreciation of the remaining assets? Remember how we calculated it? We took 350,000 rand and we multiplied it by 20% and we got 70,000. So our depreciation will be 80,000, which is the 10,000 plus the 70,000. When you add 80,000 plus 80,000, you will get 116, which gives you total movements. How did we get that 116? It is simply minus 80,000 minus 80,000. So our net movement will be negative, which makes sense because we didn't buy anything. It can't be positive. Now let's calculate cost at the end of the year, which is 350. How did we get it? We took our total cost price at the beginning of the year. We minus the cost price of the asset that we sold. Had we bought an asset, we were going to add the cost price of that asset. In this case, it will be 0. That's how we got the 350. How did we get accumulated depreciation at the end of the year? You take accumulated depreciation at the beginning of the year. Do you still remember how much it was? Yes, it was 150,000. Right? Let's see who was paying attention. What did I say accumulated depreciation is? It is the sum of all depreciation of the assets. What increases accumulated depreciation? It is the depreciation. At the beginning of the year, accumulated depreciation was 150,000 rand. We add the 70,000 rand of the current financial year. Actually, that is incorrect. We're supposed to add 80,000 rand, which is thus 80,000 rand here, right? We're supposed to add 80,000 rand. Please change that to 80,000 rand. And then we minus accumulated depreciation of the asset sold. And that will give us 160,000 rand. What do we get? How do we get the carrying value at the end of the year? You simply take 315 minus 160, which will give you that 190. Another way of calculating this 190, you can simply take this 350,000 rand and you minus 160 because it's negative. It'll give you this 190,000 rand. That is the short way of calculating it. If you don't understand, please replay these slides at least 5 times. Bye.